Hi, this is John from Options Trading Pilot. Guillermo, my business partner, we will be showing you how to trade and some ideas about what to do in your trading methodologies for the week. One thing that we do like to trade is the E-mini S&P 500 futures. You can also trade these in the triple Qs and some other areas. Before we get going, I want to share with you who we are and what we do. So again, we're Options Trading Pilot. We not only trade, and we trade all day long in stocks, stock options, crypto, commodities, futures, but we teach people how to trade. So we post our trades out on Discord on an almost real-time basis, allowing people to look at the trades that we're making, and they can decide based on their risk profiles if they want to take that trade, don't take the trade, modify the trade. But all along in the process, they're learning, and you can learn how to trade along with us. And I think that's the key thing, to understand risk. So something just briefly, I'll just look at this, where the market's live right now. So the ENS up 55 points today. So I have a trade active right now, which is a 41.40. I sold that and bought the 41.35. This is considered, I'm bullish, but not very long. It's just for the day. We have 0-day expiration, so this expires at the end of today, 4:15. So on this one, you have it's a bull put spread. So I wanted to go up, but I have some protection on the downside. So just to show you, we'll go out to another day, what I mean when we trade mechanically. So if I say, I don't think the market's going to get under 4,095 by tomorrow night, I can sell this put, and you can look at our other videos to see the details of that, of what I mean by some of the mechanics here. But your max profit on this trade would be over $500, but your max loss is $204,000. That's a huge, of course, the E-mini S&P is not going to zero by tomorrow night, but theoretically, that's your max loss. So in your buying power efficiency, you got to spend $13,000 on this trade or hold that much capital up. So if you come in here and put a little insurance in, where you are buying a contract further out of the money, now your max profit goes down only $50, but your max loss limited to $200, and your buying power is at $300. So much different trade to have a spread on versus a naked or uncovered position. So we'll get into that a little bit more, but I'll turn it over to Guillermo to look at some of the details in the current market today.
Okay, so it looks like we're going to have a thin week. There's a lot going on today. So let me share my screen, and so that you can see exactly what we're looking at. And so here we go. I'll show you my setup real quick. And the setups are important because that allows you to make decisions quickly. And so what you're looking at right now is, I'm looking at the Qs, but I literally trade off the NQ. And so this is a 4-minute bar, four minute section. I have Nvidia up here because sometimes what you can do is look at what NQ is doing, but Nvidia does it like way more aggressively. So if you think the market's going down, then do puts on Nvidia. It's just a little harder to track because it moves faster. But I've been tracking oil at the same time. These are 15-minute candles, and the short of it is that oil right now has to hold this 118. If not, it's going to see further downside. We're seeing right here. I have the Heiken Ashi candles on. I like to do that when I have a trade going, but it just closed. So you can see it's a big dig here. So we might be visiting the lows for the day. Down here, I look at the 1-minute candles. This is what I use to enter. Identify the Fibonacci zones that I'll be trading. Notice it went right through the 100%, that this is the high low for the day, and I look at the interaction at that particular time, and then we move forward in the trade. So let's take a broader view, because the broader view is more interesting because we can make better reads as far as like where things might be going or where things have been. So we're looking at the QQQ. Let me share this. Here we go. So as you can see here, the idea that we're looking at is these Fibonacci lines that are formed, and we are looking at this MACD 535.5, and notice that it crossed over. And why do I use this 535.5? I call it the trader's MACD, and why do we call it the trader's MACD is because it allows us to look at things a little more sensitively. Now, it's not like the end all be all. It just gives me a clue of like, oh, maybe there's a turn coming. Maybe there's a reversal. Maybe there's continuation. But my main strategy is looking at Fibonacci lines and how the prices interact with it. So notice how we had a nice rejection at this bottom number at 281. And since then, it's driven all the way up to the next fib line at 310. And it will have a tough time here. Notice that today, even though we've been all the way up to 2%, that the market is going down. It's going down pretty aggressively right now. So if we hit this line and it comes all the way down, then what we're going to observe is a move to this bottom. So we're seeing it's a thin volume profile, so it can move pretty fast. Specifically, it gets below this 304 number, and we should see it come all the way down. So this is a very interesting idea because we are generally in a bullish setup if you see this, but the trend is down. So it's an irregular position, right? So whenever we see a bullish move on a trend that's bearish, I'm going to call it a trap. Okay, I'm just going to go ahead and say it. Now, do we want to break out of this? Yeah, of course we want to break out because we made more money on the slower bullish runs. But as you can see, the markets are aggressively going down. Let's switch to the 5 minutes so you can observe that a little bit better. Notice how those two candles are aggressive. On the 5 minute, it needs to hold that 309.11 number. If not, then we should see this 307 number. So very aggressive move down. I don't know if news came out. This is interesting that we're seeing this as it moves. Let's switch to the SPY. We should see similar movement. Notice how long we were here in the 5 minute candle. We were 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 5 minute candles we've been hanging around, and we never broke towards the top. But that tells me that that's an indication of weakness, that the bulls can't push through that. And so the bears are really fighting hard to bring this back down. We were nice up. And so we should see this visit down. So if you look at today, just the work, the overall work of today, this is when the market opened. Things were generally moving up. Notice this is called the bait and the switch. So now I don't know what's going to happen at the end of the day. It may push back up. The buyers may come in and just push it all the way up. But in this market, the main theme that you should be looking at is just fading any bull run, right? And it's just knowing when to hit that reversal, because that's the overall trend. Let me give you a flavor of it when we look at the weekly. Look at the weekly. The weekly is each one of these bars is a week. It's been very bearish. Now it kind of doesn't give you the taste of it because of how I have the setup here, but notice that this is a big decline. Let's move the drawing the trend line. Notice that is pretty much straight down. So it's one of these ideas, right, that you got to know the environment. There's an opportunity, John, here that we may be able to do this turn, but look, this rejection that we saw here, that's not one of those rejections that inspires a lot of hope for me. And why is that? Well, because look, this is like a thin trading range. it should have been way more exaggerated, John, when we see that. That wick is not inspiring. Here, it declined, it still went down, declined a little bit. We saw that move, but nothing that really jumps out at you. Does anything jump out at you, John?
It just seems kind of like you said, it's tight in the range, kind of non-committal, not really, not a lot of commitment either way.
Right, right. So there's two things, right? The big news. Actually, let's call three things that are big news. Number one is that if Putin somehow is done with Ukraine, we should see the markets go up. That would be a really nice catalyst. Now, do I think that's going to happen? No way, no way. I think this is like a last stand for Russia. I think they really need to make this happen. They really need, think of. I was liken it to games like Civilization 2. I used to play a lot when I was in college. And that game, you can decide what kind of like society you're going to have, a warring society, or you were going to have a peaceful society trying to create stuff. Well, the warring societies always did well early. They would take over stuff, but as time went on, their productivity couldn't go. And so this is what happened with Russia. They're a heavy resource. Think of Russia of a big company that deals with energy. I mean, that's what Russia is. Plus they have people they manage and stuff like that. But the idea is like they're a big resource heavy, natural gas and oil, and so they're just kind of grasping at straws, and the way things have happened is just made it so that they're in a very difficult position as the other states separate. They have to pay to run the pipeline. So the short of it is that we're going to see Putin hold on tight with all he has. So I don't think that's going away. The next catalyst would be that I saw that Biden just opened up, lessened the sanctions with Venezuela so that EU could get oil. That could help. We need inflation to come down. And oil, I don't know if you remember, John, but during COVID, oil, they were paying you to take oil.
Yeah.
It was like,
yeah,
it's crazy. And now we're at 117.86 per barrel. That's quite a move. And so obviously this pushes inflation way up, right, John?
It does. And we do need some catalyst to get us off that that wall, that cliff right now. Yeah.
So I think later this week, it might be Thursday, we get the CPI, and so, or maybe Friday, and that would help, right? Let's say we see inflation come down. I think the expectation is that the month to month should be a little higher, but the annualized rate should be like 0.1% lower. 8.2 versus the 8.3% annualized that we got. But that's not a serious move. We've had a 25 basis point move up by the Federal Reserve, a 50 basis point, and I think another 50 basis point, and still we get 0.1% move down. Yeah, that's not inspiring a lot of hope. I think the proper move would be, John, that we shock the system. It would hurt the economy or hurt the markets. But as traders, it's okay. We make money each way. Yeah, it's hard to make money in the puts, right? Because they react faster.
Yeah. Well, we'll take it on either side. We trade long, we go short, we trade in between with iron condors. My longer term meaning of 6 months out is we get inflation under control. We hit the brakes too hard, and then we're in really throw us into a deeper recession.
Yeah.
So that's problematic for everybody.
Yeah, it's a big deal. It's one of those things that you really have to be careful with what's going on. But look, in the 80s, Volcker decided to shock the system and push interest rates way up. And what did it give us? It gave us like 40 years of doing kind of whatever they wanted to do, which is fascinating, right? So it might hurt us here, but it's like for the younger generation, this is what we want. We want something, because I'm okay. Like, we can suffer a little bit. We're adults, we're big, we can do this. And as traders, you can offset a lot of these issues. So let's focus right on that type of stuff. Now this is just conjecture, right? Let's go back to the trades. We can see that the NQ was almost up 2%, and now we're down 0.6 to only being up 0.66%. So I didn't see if any news came by, but that's a big move down. So this could change during the day. Yeah, this could change during the day. Let's see what happened here. Yeah, that could happen, John. But overall, the forces at work here is the economy is still down. We owe a lot of money. We have to continue increasing debt. The fortunate thing is that the market is forward looking. And so we can see some really interesting ideas, right? Let me switch to, I want to show you this. So look at these big candles. And just a hint, John, like it's really awesome just for our viewers. Once you're in a trade, you can go to hike and issue candles and you won't get shook out because you don't see those candles. So you can see all red. You can stay in that trade longer.
Yeah, I like that one.
Yeah. Yeah, it's really useful. So notice it's trying to make a move up, and that'll pick up on it. So it's a interesting times that we're in. But for traders, these big moves are phenomenal, right? This is like, yeah. I mean, you've seen we trade mechanically. I love selling premium because those tend to go expired. 70% of the time they expired without being claimed, so you just make the money. But
how much did you make on your triple Q trade today that you're out of already?
Well, I was in and then I was out. Let's see.
You probably made 20% in a few minutes, or?
Oh yeah, I made 20%. I got in another one that I didn't have time to list, and that one I made 38%. I have a runner right now, which is fascinating that I have a runner, and that's still going. So that one now is up at, hold up, what did I buy it at? Yeah, that one's 120% up, but I only have one contract left. But hey, I made my money for the day, John.
Yeah, well, I'm glad you're sticking around.
I'm not greedy, man. So that's what I was going to tell the viewers, right? Our viewers is that we're you do a lot of mechanical trades. I have found scalping to be really easy right now. Trading the edges, observing the price action, and that's part of the training that we do. Is like you learn what price action is important to look at, those patterns that are significant, and where, right? It's like you don't look from everywhere. There's some prices that don't matter. So it's like, so yeah, just taking the easy trade is really the way to go at this point. And that's what we've been doing. Overall, yeah, it was a good day today. So I made money on calls. I made money on puts twice. I had puts going, it reversed on me, closed them, took calls, made money on that. Took a heavier position on puts near the top when I saw the stall. I sold 3 of the 4 contracts. I should have gone heavier, but it's Monday. I'm not expecting a really big move, and so it kind of colored my eyes to just ease a little bit in the heaviness of the contracts. But I've been trading.
What's nice is though it doesn't have to move very much to make decent money.
And for the viewers, I've been trading the near term, and today we're 0 DTE options. That you better get your move in the next hour or 2, or else data really eats your option value.
Unless you're definitely.
It's risky, but listen, I'm playing with this amount of money. But
exactly.
It's nice. I'll take it anytime.
And what's nice on these trades, they're risky, but we have limited risk.
Right.
They're not all in trades. So, right. and we do like to trade the one base, base hit, a double. We'll take a home run if it comes, but the best part about trading mechanically and without too much risk is we'll be here tomorrow, and then we'll be here in 20 years, and it's just how it is. So that's because I've been doing this now for something like 35 years, I think.
That's amazing, man. I've been doing it for a number of years, when to this level, probably in the last couple of years, where, I'm an investor and been investing a long time. I've done plenty of calls, plenty less puts, but plenty of calls over the years. Selling for premium and doing verticals are something that you taught me. So that was awesome to learn. It was really easy to incorporate to the things that I look at. And now I'm to the point where I'm scalping.
Yeah. Yes. Nice.
10, 20, 30 contracts, and so it's very interesting, the evolution of that. I always like to use the example of when you want to hit 3-pointers, you better not just be practicing from that 3-point line. You better be stepping back to make that 3-point line easy. And so that's what options are like for me. It's like the investing is just kind of easier because we go through the scalping ups and downs. So, and then the vertical is somewhere a little bit in between there because there's higher probability of winning, right?
There is, yeah.
And
it also doesn't move as fast.
It doesn't move as fast, correct? Anyway, okay. So anything else to cover? I really think that for the week we're likely to be range bound until we get those numbers in the CPI. So
yeah, and that's either Thursday or Friday.
Yeah, I've heard it two ways. I've seen it two ways in different websites. So I don't think it's ever been on a Friday. I think they're Thursday. So
maybe they are. Yeah.
My over/under is Thursday.
Yeah, exactly. Okay. Well, good talk, Guillermo.
Good talk, guys.
See you guys on the trading floor.
You got it. Bye.
Bye.